right, real quick, a couple of trades today. I did some long calls today. You know, the market, it gapped up, then it came back down. Now it's back to flat. So my month of June is off to a very slow start in that I need the market to move one way or the other. Kind of like staying right here in this trading range is going to hurt me, because for the most part I'm long options, which with the time decay, the lack of volatility or the lack of direction is going to go against me. So we'll keep building, and we'll see if this bear market rally could follow through. Certainly not doing it today. All right, first trade today, Magnite, MGNI. I went long calls here. You know, I came in this morning and I saw that options in this company were trading almost 7 times the daily average. And it seemed like the most active contracts were these calls, the 1250 calls, which were pretty close. You know, the June 17th calls, the 15 and the 1250, near term. Also, someone jumped out here at the January 2023 calls, so that's kind of interesting. But definitely some folks out there are trading these contracts as if there's an anticipation that this thing is going to go higher. So you can see here, we went ahead, we bought the July 15th calls, $12, $50 strike price for 65 cents. All right, here's Flex. Ticker symbol, that's ticker symbol Flex, F-L-E-X. So I came in this morning, I saw that the volume in these contracts were trading 13 times the normal average. And it seems like these June 17th, 15 calls, these October 21st, 19 calls were pretty active. So again, some upside anticipation. If I take a look at the chart, it's making lower highs, which is not a great sign, but it did kind of break out of this downtrend. And this morning really had a strong day, ran all the way up to 1825, has since then pulled back to 1737. But there's definitely some buying interest heading in here. So I'm anticipating that this thing could reach at least its previous highs around 19 bucks by the time of expiration. Went ahead and I bought the July 15th calls, $18 strike price for 60 cents. So this is pretty interesting. This looks like maybe an earnings play. Maybe somebody knows something, I don't know. But trading in Oracle, ORCL, was up more than 14 times the norm, which is a lot for a company this size. And you can see here that the June 10th, which is this Friday, the options were very, very active. So there might be something coming up in the very near term that's going to drive this higher. The reason why I think it might be an earnings play is because they're going to be reporting on the 13th. So anticipation that perhaps there's going to be a run into that earnings announcement. So what I did, I went ahead and I bought calls. These are the June 17th calls expiring in 11 days. And these are the $74 strike price. I bought them for $2.30. This was kind of surprising. So Kellogg, ticker symbol K, the options rose 38 times the norm. That's a lot of activity, and it seemed to be concentrated around the June 17th calls, the $75 strike price, the $70 strike price, $72.50. So lots of activity on the very near term, slightly out of the money calls. If I take a look at the chart, very interesting here. So let me just annotate this real fast. I'm going to draw this horizontal line here. So this is a very important level. Black and thicker, there you go. So this here is a very important level. It acted as previous resistance, then it broke through, and now it acts as support. This stock here now seems to be in a relative uptrend. The 20 is above the 50, and the 50 is still upward sloping. And today it came down, hit the 50, and bounced off of it. I like this MACD curling higher right here on the daily. So I'm thinking it's going to find some support here and perhaps even shoot up to retest the previous high. So I went ahead and I bought the July 15th calls. This is a $70 strike price. I bought them for $1.26. All right, Targa Resources, ticker symbol TRGP. Their options this morning were trading at almost 9 times their normal volume, and it seemed to be concentrated right here again in the near-term June 17th contracts. These are the 75 and the 80 calls, pretty heavily traded. So you can see here, technically I would like to wait for this thing to come over. This is the daily, and kind of retest the 20 and the 50 here. And then I see the MACD is maybe making a curl here. So I might be a little early on the trade, but I left myself a little time. I'm anticipating that this cup formation will spring it higher eventually. So TRGP, I bought the calls. These are the July 15th $80 strike price, and I paid $2.25 for them. All right, last one is IAA Inc., ticker symbol IAA. So today, volume rose 12 times the norm, and it seemed to be concentrated in these outdated October 21st calls. Someone is picking up the 45s and the 50s pretty aggressively. This one here looks pretty good, right? So, I mean, it's in a downtrend, but I will say that it may have hit a double bottom here and has since come up. It crosses 20, it crosses 50 to the upside, and the 20 now has crossed above the 50, so there might be a trend change here. Today it popped up, it's up 1.2%, it was up higher a little earlier, so I'm anticipating that this uptrend is going to stick, and we should see this name start to creep higher as the summer rolls on. IAA, bought the calls. These are the October 21st $40 strike price, and I paid $3.80 for them. All right, that's the trade for today. Market is flat-ish after gapping up, so still struggling. This bear market rally is still struggling to find footing. My portfolio positioning here, I have a 55% upward bias in the portfolio. I have a 37% downward bias, 8% neutral bias. So my portfolio is set up to see somewhat of a bear market rally or a rally over the next couple of days and weeks into the summer. But that said, I am looking for opportunities to beef up my downward bias because I'd like to keep this as neutral as possible. So there we have it. Good luck.